Hi guys, Stephen here. Welcome to the Focused Capital podcast. I want to record this episode just talking about questions that you as an investor, as a potential limited partner, should be thinking about when considering a prospective real estate investment. So really the scenario I'm talking about is someone who is considering investing in a larger, let's say, commercial real estate deal as a limited partner, and you're evaluating information that, let's say, a general partner or a real estate syndicator has provided to you as a summary or as a snapshot of what this particular investment is going to be about. So I wanted to give you 5 questions that I think you should consider, and I think you should discuss with the general partner or who's ever presenting this information to you for this particular real estate investment. Now, typically the basics are going to be provided to you: your internal rate of return or an overall return on investment, a hold period, the minimum investment amount. Some simple financial metrics are typically going to be provided to you to consider as part of this particular investment. And then you're going to have some back and forth, and you're going to maybe weigh this or consider this against other investment options that you have in the market. Real estate, especially on the commercial side, when you're dealing with bigger real estate investments, there's lots more things that the general partner's typically completing and managing and doing on your behalf. So I think it's important to not necessarily become an expert in all these things, but have some awareness of them. And as an investor, you can make better decisions if you're a little bit more aware of what's going on behind the scenes. And again, it's not so you can necessarily micromanage the general partner or the real estate syndicator that you're working with, but it's more just to help you have an understanding and make better investment decisions along the way. So I'm just going to run through these 5 sort of questions and sort of themes and topics to think about. And my hope is that it'll help you have a better understanding and ask some better questions when you're evaluating these real estate investments going forward. One of the questions I think you should ask is about risk. Typically, there are risks involved with any investment. So getting an understanding of these risks up front I think is key as an investor or as someone who's considering entering into any type of new venture, right? So ask that question about what are the risks, and has a risk assessment been completed for this particular project, this property, this acquisition, whatever it is you're looking at. And a professional real estate general partner will have a sense of what the risks are for this particular investment. They're going to be understanding if there's risks associated with vacancy or with the market or with interest rates or with any number of things that might be part of this particular project or property that they're taking on. Now, when I say risk, some people get their backs up and they think, oh, geez, it sounds risky. The truth is there's risk in any type of investment, any type of venture that you're going to take on. And so the key is not necessarily to just shy away from the word risk, but really to get an understanding of how those risks are being understood, how they're being documented, and also how they're being mitigated and managed going forward. Because risk management is really what you should be concerned about. If there's a risk as part of the project, but there's some way to handle it, there's some insurance policy you can get, there's training, there's resources that you can bring onto the project, and the risk is mitigated, then that's a reasonable solution to that particular problem, right? So really this question is about what the risks are and then how those risks are being handled by the general partner going forward, right? So getting a good understanding of that. The second question I would be asking is about the appraised value. So especially when looking at more complicated real estate projects, there's going to be this sense of a purchase price. There's going to be some money spent typically on closing costs. And then there's obviously, depending on the business plan, there's going to be costs associated with executing your redevelopment or additions onto the property, renovations, whatever it is that the business plan entails. And so asking the question about appraised value and are the costs associated with the business plan going to be resulting in a higher appraised value? And if not immediately, then what is the plan to get that appraised value or that end result up in terms of what the property is going to be worth? So I think it's important, again, not to understand all the minutia of that, but really to get a sense of, okay, acquisition might be, let's say, $1 million, several $100,000 spent in closing costs and renovations and XYZ and on. But at the end of it, what is the appraised value? What's the end result? And really just having a sense of what some of the costs are that are going in, and then obviously what that appraised value is on the exit of that. And that, again, that appraised value could be a result of finishing all these types of projects or these renovations and things like that. But just having a basic understanding of, okay, if I'm spending X, or if the partnership is spending X on acquiring and developing this property, what is that end result going to be? And really just having a sort of a summary view of that. I think the next question is maybe obvious, but I think it's one that's important. And it's really about how that general partner is getting compensated. So what are the fees? And sometimes that's presented very plainly in terms of what the general partner or syndicator is getting compensated as part of the deal. But I think I raise the question because it's something that, limited partners and investors need to be thinking about in terms of wanting their general partner to be compensated properly as part of this deal. And the reason you as an investor want your general partner to be compensated is because you want them to have incentive to do well on this particular project. So having a sense of not only are there fees and maybe what percentage they are, but okay, is there an acquisition fee? Is there an asset management fee? Is there an asset disposal fee? And tying those back to the incentives that will allow that general partner to execute on this project. And I think as an investor, having a sense of those fees and having a sense of how these large scale commercial real estate projects are rolled out is really beneficial because, again, this is a partnership, typically speaking, if you're dealing with a limited partner, general partner type setup for a commercial real estate project. And so you want the parties to be incentivized. You want it to be very clearly stated what the fees are, and having a sense of, okay, what are the milestones and what are the trigger points for each party to get compensated in various scenarios. So again, asking those questions about the fees and then what are the incentives and then how are those fees rolled out to the parties going forward. I think the fourth question really, again, might another one that might be obvious, but it's about the history of the property. So a lot of times we focus on the business plan for the property and execution going forward. But when you're entering into a new property acquisition, you really want to have a sense of what the history of the property was, especially when you're dealing with commercial real estate and specifically industrial real estate. Having a sense of, has the general partner looked into the history? Have there been environmental reports completed? What are the mechanical systems? Is there a clean bill of health, essentially, for this particular property that will allow you to have that sort of base to go forward from to execute your business plan? So I think just having a sense of what the history of the property is are the buildings on the property 10 years old? Are they 50 years old? What were they used for before? Just asking some very simple questions about, is this a brand new building? Is it relatively new? Have there been additions? Quick questions to just get a better understanding of what it is you're investing in. And again, a reputable general partner, a reputable syndicator will have these sort of questions answered already. They'll probably have multiple reports documenting the history of the property and things like that. And this ties back to that first question we talked about with risks. If there are any risks, they should be uncovered at that point. But again, I think it's important just to have just a very sort of summary understanding of the history of the property and if there's anything there that would affect the investment on the long term. And then I think the last question out of these five that investors should be asking is, what is the plan for managing the property? So a lot of times we assume that a property manager is going to be hired. There's going to be regular visits to the tenants. There's going to be collection of funds. There's going to be reports produced and things like that. But I would take the time to just ask some basic questions about the general partner's role, and then also, if they're not specifically doing the property management, maybe they're acting as an asset manager. And then what is their relationship with the property manager, and what's the sort of strategy and the plan to manage the tenants, to make sure the financials are being handled properly? What's the plan for vacancies if those happen to come up, building maintenance, things like that? Again, not getting into all the minutia, but asking just some basic questions under each one of these themes to get a better understanding. With smaller bay industrial properties, for example, which we invest in, these tend to be small business tenants, and they're the ones paying the rent. And there needs to be a good understanding of what they need out of the property, what are their requirements. And so I think it's important to ask the question of the general partner, what's your plan to manage those types of tenants? Is there a certain strategy where you've got certain touch points throughout the year that you're managing these tenants in a certain way? How are you incentivizing them to either stay at the property, to increase rates? How are you managing your leases and things like that? Again, it's important to just get an understanding of what the plan is. And a reputable operator will have these questions, will have answers for these questions, and be able to confidently tell you, hey, this is our experience. This is what we're seeing. This is why we do this. We've already asked these questions. We've got answers. We've got reports, and we've got some plans moving forward. And, again, these aren't the only 5 questions, but I think these are 5 that I've seen that maybe not all investors are asking based on whatever pitch deck materials they're getting from the general partner. But I think it's important, again, to get a good understanding of these things and use them as a reference point for your investments going forward. So I hope that helps. If you have any more questions or want to get a sense of what we're up to here at Focus Developments and Focus Capital, I encourage you to visit our website at focuscapital.ca. Have a look at our projects, have a look at our free resources and guides, and hopefully those will help you going forward. Bye for now. I hope you got some value out of this podcast episode. I invite you to like and subscribe to the podcast, leave a review, leave a comment. Let us know what you think. And for any other information about us, what we're doing, and the types of investments we're into, please visit focuscapital.ca, focuscapital.ca. And on there, you can find a ton of information, additional podcasts, and a lot of free resources. That's it for this podcast episode. Bye for now.